So we've recently been recording a series of interviews with some of the key fund managers and portfolio managers on the funds on our coverage list. And today we're delighted to be joined by both Sam Vecht and Emily Fletcher. Sam and Emily work on the BlackRock Emerging Markets investment team, and they are portfolio managers on the BlackRock Frontiers Investment Trust, which is a trust we added to the coverage list several years ago. It's just by way of an introduction onto this one. This trust, we believe, has some very differentiating features to it. Certainly, when you compare it to some of the other broader emerging market fund strategies out there. And when the team define their frontier universe, that is any country which obviously sits outside of the developed market, the MSCI World Index, but also excludes the largest 8 emerging markets, as in the largest 8 countries by market cap that you would see in the MSCI Emerging Market Index. So that, for example, excludes Brazil, China, India, Korea, and amongst others, which represents a very large portion of the emerging market region in market cap, and obviously are very dominant in most emerging market portfolios. So what the team are really focusing on are those countries which lie beneath that, beneath those market indices, which actually make up a very small proportion of global market capitalization, but nevertheless include some really very large populations, and also with very favourable demographics often, and also includes some of the very fastest growing economies in the world. So a very interesting subsect of the geographic region, and that's really the clear focus of this trust. I wondered, guys, if to kick off, we often find investors kind of paint all emerging and frontier markets with a kind of similar brush, looking at very similar characteristics or behaviours. But it's clear that some of the countries in your investable universe are very really vastly different. So I wondered if we can maybe pick up on a couple of those countries just to show how different the performance drivers are.
Should I kick off? Yeah, thank you very much for the question. I mean, I think that's very fair. And I think the other thing to say about these countries is very much they're often dominated by domestic investors. So what's happening in domestic politics and economics really is the feature. And there'll be very little correlation between, for example, what's happening in Chile to what's happening in Vietnam, Philippines, what's happening in Egypt. So I would say that's exactly right. You have some countries such as the Middle East where oil price will be a much more dominant factor. Some countries where I think you'll be much more focused on what's going on domestically, perhaps somewhere like the Philippines. Vietnam, that's much more about sort of global electronics exports, sort of driving the economy there. So some really, really different features. But actually in the main, I would say it's all about what's happening domestically. So it's very strong domestic growth, driving what we think will be strong domestic stock market performance on the back of looking at some companies that we think are really, really cheaply valued. And we find quite a few pockets of opportunity for that around the world.
And perhaps just to add, what they have in common, again, is a pretty V-shaped recovery from COVID affected 2020. The vast majority of countries that we're looking at have weathered the COVID crisis better than the West, and definitely better than what people were expecting 6 months ago. And the levels of growth that we, based on international agencies' forecasts, would expect for 2021 is faster growth than we're seeing for mainstream emerging markets, and obviously a lot faster growth than we'll be seeing in the West. Of course, it's not GDP growth which is critical, it's the company's growth which is critical, but one often leads to the other.
And perhaps just to make it clear for the listeners, I mean, can you maybe just list off a few of the main countries within this universe? You mentioned Indonesia. Just, I mean, what are the countries we're talking about here that sit below those big emerging markets?
So if we look at Asia, it would be countries like Indonesia, Vietnam, Pakistan. Those would be amongst the biggest, but obviously there are a lot more countries that we invest in Asia. In the Middle East, it would be Saudi Arabia, Egypt, Morocco. Into Africa, then we could look at countries like Kenya, Nigeria. In Eastern Europe, it would be countries that would include Kazakhstan, if that's part of Europe. They definitely play in UEFA. Kazakhstan, Greece, interestingly enough, Poland, Hungary, Czech Republic, and then countries in Latin America, ranging from Chile, Colombia, Peru. So a very diverse collection of countries, some obviously more developed, some less developed, some really not developed at all, but they do have in common the characteristics we described earlier.
So the performance of that group of countries has clearly lagged the recovery that we've seen in certainly in the developed markets and also in areas like China. And we've seen a relatively small group of stocks really driving markets higher in large part this year. I wondered if you could touch on kind of where you see the catalyst for recovery in fortunes for the frontier markets in particular.
Yeah, so maybe I'll start on this one. I think what's been really interesting to see has been that we are really starting to see strong economic recovery across frontier markets. Our belief is that we will see behavioral normalization, and I think we would take China as a template for that, where we have reached the point where we've seen domestic travel, domestic hotel bookings return almost to normal. And we think that as we start to see the lifting of some of the lockdowns, which we are hoping to see in 2021, we think we will see that normalization really spreading across emerging markets. And to give some examples, we've got Egyptian auto sales up 50% year on year. We've got Pakistan current account surplus at sort of best levels we've seen since 2003. We've got Indonesian cement volumes that were down 30% year on year, back to minus 5% year on year. So I think it's a very small snapshot, but we are really starting to see that economic recovery come through at the moment. And I think what we expect that will feed into stronger market performance.
So if we move on to some of the maybe specifics of the portfolio, so can you give us some example of some of the longer term trends that at play at frontier markets? What are you seeing that's kind of really compelling you to invest in certain markets within the trust?
Apologise, my puppy might bark in the background. I think a couple of strong trends that we'd really like to focus on. I think the first would just be sort of the environmental, energy, renewable trend. We think we have a number of stocks that are well linked into that. An example would be sort of a lithium company in South America, where we think the growth in EV is going to be hugely beneficial for that company. I think that we would talk about some of the urbanization trends, demographic trends that we're seeing. I'd mention perhaps a sort of a Vietnamese supermarket operator that is strongly expanding stores, where we think their ability to continue to expand as the leading formal retailer in that space is very substantial. And we might touch on something like a microfinance company that we have operating in the Middle East and North Africa, where we again see very, very strong growth as they're reaching out to an unbanked population. And again, some really strong growth trends that we think will continue to be shown there.
Perhaps one of the more underappreciated features of frontier markets and the BlackRock Trust is the level of income that's generated from the portfolio. I wondered if you could maybe touch on really how that feature came about and maybe talk about the kind of the nearer term impacts that we've seen. It's clearly been a challenging market for equity income with lots of postponed dividends. Just how you've seen that play out this year and your outlook for the future.
Well, I think one of the interesting aspects about these markets is, despite their fast growth historically and despite their significant payments of dividends, these markets have actually derated over the last few years. So earnings have grown 40% in dollar terms over the last few years, so real earnings growth. And the dividends have grown in line, but the share prices have fallen. So long before there was COVID, these share prices were derating, and so naturally the dividend yields have been increasing. The board have said they're going to be paying a minimum of 7 cents dividend for the year ending September 2021, in addition to the dividend that they've just announced the year ending September 2020. And the reason why the board are able to say this is because the companies that we invest in, and we're not an income fund, and we're not an income trust, that's not our focus, but the companies we invest in generate profits, unlike some companies around the world, and they pay out a significant portion of those profits. And while it's definitely true that a small portion of the companies we invest in suspended dividends, sort of deer in headlights, during 2020, and another small portion were told by governments to cease dividend paying in 2020, some of the financials. The vast majority of the companies we invest in pay dividends. They pay significant dividends. And so when we look at our fund, the vast majority of companies we invest in yield 3, 4, 5, 6% a year. Given how lowly the share prices are rated at the moment, that really doesn't surprise us. And hence, the board have the ability to say, we don't know exactly what's going to happen in 2021, but they can give us, the comfort that there will be a significant dividend payment a year out from now.
Can we maybe just touch on the ESG as well? I mean, how does that come into? Obviously, a lot of investors talk about governance and issues in some emerging markets, but I wonder how you kind of build in ESG factors into the investment process.
I think I'll start with that. I think when one can think about ESG, and definitely governance is a real issue when it comes to investing in our market. These are countries that clearly are not as developed as the UK or Western Europe or the US, and the standards in our countries aren't necessarily at the same level yet as they are in the UK or the US. However, I would make 2 points. Number one, if one thinks about real ESG and macro ESG, there has to be a place in people's portfolio to invest in the companies that help 3 billion of the world's poorest people. If one thinks about what ESG really means, improving the outlook for the world, there has to be a place to invest in the world's poorest people, and not just to ignore them and invest in the world's biggest companies. So at a macro ESG level, we think people should definitely be looking at these countries, and the standards are improving year after year. So it's off a low base, but the standards are improving. Interestingly enough, in our 10 years of running this trust, while we've seen poor corporate governance in some of our countries, the only real frauds we have seen have been in companies listed in London, remarkably. So not that we've been invested in very many, but you can have companies listed in London with operations in multiple countries. So it's really interesting. 10 years on, that's where we've seen the frauds, as opposed to just the poor corporate governance. Standards are definitely improving, and we strongly believe in backing the poorest people of the world. Emily?
I think you've covered that very well, Sam.
Sam, Emily, we'll leave it at that. But it is always really interesting to talk to you, and I appreciate your time today. For those listening in, if you'd like any more details of the BlackRock Frontiers Investment Trust, you can contact your investment manager for a copy of our recent research note. But thanks very much.